Welcome back to U.S. Taxation, ACC401, and today Lesson 6. The lesson is rather brief, covering pages 30 to 32. It presents three topics, all of them issues dealing with tax or income deductions for tax purposes. They are charitable deductions, miscellaneous deductions, and personal exemptions. All four of the discussion questions are related to the personal exemptions portion of the reading. Charitable contributions first. To qualify, a charitable contribution must be a gift to a qualified charitable group. Examples are offered here: Salvation Army, Red Cross, and there are as well smaller ones, and of course any registered religious organization qualifies. Only cash and property are covered by deduction. Services are generally, as a general rule, not deductible. Partial interest in property is not deductible either. You can't give half interest or, let's say, free rent, for example, in a property that you still maintain control. You have to give the entire property, be it real property, that is land and buildings, or personal property, cars, jewelry, etc. All deductions are recognized in the year that the cash or property changed hands. That means there's no carry back or carry forward. The table below all of this material presents allowable rates and conditions for both cash and property gifts. Note that the maximum allowable rate is 50% and that the other rate discussed is 30%. So those are amounts that are deductible from your ordinary income. Note that political campaign contributions are not deductible. So any money that you gave in the last election to Hillary Clinton, too bad, you can't deduct that. It was just money poorly spent. If you give it to Donald Trump, you have the satisfaction of seeing him elected. Ha ha ha. Miscellaneous deductions. Up to 2% of adjusted gross income is deductible for the following items: unreimbursed business expenses, including uniforms, travel, meals, entertainment, and union dues. These can be significant at times. Note that meals and entertainment, you're allowed to deduct 50% of meals and entertainment. This is, of course, has to be business related. That means the conversation turns to business at some point. Does that mean you can't enjoy the entertainment? No, but it would probably be foolish to include as entertainment something other than, say, a musical venue or so forth. A rave, probably not. Employee education expenses are deductible, so are job search expenses. Malpractice insurance for professionals, this is tax deductible. Appraisal fees, alimony, and rental on a safety deposit box. Safe deposit box, let's say you have property that needs protection. Doesn't have to be gold, but that would be a good example. You want a safe deposit box at a bank, and that's going to set you back $30-40 a year, and possibly more depending on the bank. So you want to get that tax deduction for that. There is an unlimited deductible for gambling losses up to the amount of your winnings. So if you go to Vegas and you lose, keep track, because if you win, you're going to want to offset those winnings with the losses to show your true profit. And I know it's fun to dwell on the big gain, but then you pay big taxes on it too. Also, federal estate taxes. When a family member dies and leaves you money that's taxed, that tax is deductible from your personal income tax. Not from your personal income tax, but from your personal income. Funeral expenses and political contributions, remember, are not deductible. So When you bury grandma, you're doing a good thing, but Uncle Sam does not cut you any kind of a deduction for that. Page 32 covers potential personal deductions for the taxpayer, spouse, and dependents. There are specific directions listed for multiple support arrangements, and this is also taken up in the discussion questions. What if 2 or 3 or even more people are providing support? What's the cutoff? And the basic number there to keep in mind is 10%. If you're not contributing at least 10%, you don't get to take part of the personal deduction that individual represents. There is a relationship test, actually 5 tests or 5 conditions listed elsewhere, not here, unfortunately. And they are the subject too of a discussion question. Let's take a quick look at those. Discuss the tax treatment of a qualified widower with dependent child for 3 years, including the year the spouse died. How do you treat that each year? Number 2, to get a personal exemption, a person should pass relationship tests. Discuss the relationship test elements. And again, this is presented elsewhere in the material, not directly here, but we have covered it recently. And number 3, discuss the amount of personal exemptions available generally and for people age 65 and above. What are the exemptions allowed? This I have not yet seen in the material, but we will go through it in class to see if we can locate it. And finally, number 4, discuss the standard deduction amounts depending on each filing status. Married together, married separate, single, and of course head of household, not head of household. Those would be the basic categories. Look forward to seeing you in class shortly, and we will take up some discussion of deductions. Look forward to grading your essay questions, of course, and finishing up the class we have after today, after tonight, 2 only to go. See you later.